Okay, welcome everyone to my stock market technical analysis channel. I'm going to do a closing market wrap video. We've got some big, just some big things going on, and we're right at that pivot point. So we definitely want to really stay sharp on these charts. So guys, if you guys are finding value in the content, drop me a thumbs up. Also, again, I put together a stock market technical analysis course. I'm raising the price, bumping it up on Sunday. If you've been following my trades over the last week, couple weeks, really since the beginning of this year or whatever, you're well in the money. All right, I pointed out a ton of money-making trades. They've all, we've been cashing on all kinds of these trades. So, and if you've done that and you've done well based on the trade ideas, but you haven't taken the course, I think you're selling yourself short, and you're not, building a skill set. You're going to, again, I'm trying to teach you how to fish, not just give you a fish. I'll give you the fish, I'll put out these videos. If I see trades that I'm entering into, there's no harm in pointing it out to everybody. But again, taking the course and building that skill set is going to teach you how to fish. Check that out. Link in the description below. I priced it affordable, but I am bumping the price up to $150 on Sunday. So check that out. And then to wrap up, guys, before I get started, hey, just as kind of side note, I'm having I want to buy these pairs of sunglasses, and I don't know which ones to get. So I figured I'd do a quick poll on my channel. You guys can maybe let me know which ones you like, and that might help me make a decision. So again, we're gonna go with these are the ones that we're gonna go with. Option number 1. All right, they're just kind of a bronze gradient kind of style. I don't know if you guys like this style, but let me know. Do you like those ones? Option number 2. These are going to be more of a aviator-ish kind of style. Still pretty cool, I think. Kind of a brown gradient. Okay, option number 2, and then option number 3, which is just this grayish, grayish gradient color, but those ones. So option 1, option 2, option 3. If you could drop a comment down below and let me know which ones. I'll kind of do a poll. Maybe that'll help me make a decision, because I think they're all super cool, but I just want to get one of them to start. So all right, getting into the charts, guys. Triple Qs. So we started off the day with a little bit of rally, and I think there was some hopium around the Apple earnings and how great. Go watch CNBC. It's almost comical. I don't watch CNBC, but every now and then when I flip it on or read some of the stuff, it's just they're always trying to pump. They're always trying to say, "Oh, now's the time to buy the dip." And it's just funny. I looked on their website, and they've got Kathy Wood coming out talking about how she's buying Teladoc 20 million more shares. She just took a complete bath on Teladoc, and she's buying more. And they just put on people that are just like, her fund's down 70%, and they're giving her credit. I don't understand. But okay. Anyways, so Triple Qs closing at the low for the day, closing at the low for the week. And if we go to the monthly chart, this is really what I want to point out in this video. And I know this chart looks super messy on the monthly because I've got all kinds of lines. I've been really attacking this chart. So the bigger picture, what I want everyone to focus on is this line right here, all right? That top line, that's your bull market in tech since 2009. I've kind of marked out this, this is the channel that Triple Qs in the tech sector's been rising within, all right? So there's your monthly tags, all right? Very solidified channel. Now the Fed caused us to get way out of bounds in this channel, which caused the massive inflation, which we're now seeing throughout the economy. So we basically have stagflation. We've got high inflation, and we have slowing growth. So this is what happens in an inflationary environment. And I'll point something out again on that. But on the monthly chart, boom, big old monthly breakdown back into the channel. My channel might even be slightly off on the bottom. But here's the thing, guys. Here's what I want to point out. Bigger picture stuff. The shorter picture, I'm still looking for kind of this area right here, about 299, 300. I think we get that next week. All right. We might even get it. We might gap down to it on Monday. But bigger picture, I think there's a high probability we're going to break this channel to the downside. Okay. and we're ending a 12-year long bull market, and we're actually going to go into a pretty strong bear market. Okay, now again, we can't say that's the case quite yet. Going to the weekly chart here, we still have, this channel here to break. But if we break it, then it is very likely we're seeing, we'll be in a bear market. All right. And because we overshot so much to the upside of the channel, then it makes sense that we're not going to just come right back down to the channel and then everything's great. We might get a little bounce off this channel bottom. I think that's likely. We bounce maybe a little bit for a couple weeks or maybe even a couple months. Who knows? But I think down the road, not too far, because selling happens a lot quicker than, when the market goes up. I think we break this channel and head lower. So I'm going to put out this other target here. Now, this is kind of a bigger picture target. Here's your pre-COVID highs. All right, right there. This is where the market was at right before COVID hit, okay? So that would be about 237.75. We'll just call it 237 flat when we're talking such obtuse levels. I think that's a good target as well, okay? Now, that would come on a break of the channel, but if we break that channel, I think we're heading right down there to the pre-COVID highs. If you don't see the Fed stepping in, all right, if we head down and hit the bottom of this channel and we still don't hear about the Fed stepping in, reversing course, starting to ease back, pull back, whatever they decide to do, something that's basically giving the market an olive branch, if we don't hear any of that, then we're likely going to break the channel and head down here. And this is probably where the Fed will come out and say, we're not going to be as aggressive with hiking. Inflation's starting to cool back. If inflation, and that's likely what's going to happen, inflation's going to cool back a little bit, all right? It'll recede a little bit. It's not going to go back to 2% or anything like that. It'll still be running hot. Your money will still be losing value. But that'll give the Fed a little breathing room to say, okay, we don't need to be as aggressive. We're starting to cool off. And that'll be it. It's just going to be, we're going to be maybe fall here. The Fed starts backing off. Inflation continues to run higher. Maybe it starts to increase again. The Fed starts to talk hawkish. Eventually, basically what they're going to do is let inflation run for the next decade, is what I'm assuming. And then we'll have these periods of deflation where they're trying to spook the inflation down, trying to talk the inflation down. Hey, we got to get inflation down so we're going to get hawkish. And they'll never really get that. I mean, the rates will never really go that high. Okay, they'll just act like they're going to get rates high. If you go to the SPX, this is the S&P 500. It's not the SPY, which is an ETF, but this is the index. And I go all the way back and I look at the monthly, and I get back into the period of the 1970s, which is really our last inflationary period. This is what it looks like. Okay, inflation was running, basically well above the, 5-10%, roughly 8% for over a decade during this time frame. And you had these periods of deflation, deflation. You kind of went nowhere. And then at the end of the decade, you had, after all these big bear markets that took place over the decade and inflation was running hot, you basically, if you weren't wiped out by stock market losses in the bear market, you got wiped out by the inflation. The market essentially went nowhere over 10 years with big periods of deflation, and then the inflation, while it was running in the background, wiped out your purchasing power. So it really was, pretty devastating. This is what I think we're in for. All right, it'll look something like this. Now where we're coming from, I believe we're coming from something like way up here. So I think we're due for a big old move to the downside. This drop from high to low back then was 50%. So yeah, something like that. We get a 50% drop, and that'll probably be it. And inflation will be continuing to run. And yeah, that's what we're looking for. So I'm going to, I'll point it out as I see it, guys, but this is what I want to show you. Okay, IWM, since we closed the month today, there's the monthly chart on IWM. You can see basically closing at the low, breaking all levels of previous monthly support, which were basically right there at that 188 level that we were really watching for quite a while. We broke it, closed below it, lights out as far as I can tell. So looking at the daily, unless they have some sort of snapback, but we still got that monthly close. So pretty weak monthly close. I think we're heading lower down to 170. That 170 target is pretty much looking, it's just looking more and more probable. And obviously we're getting closer to it. But again, going back to, when they had that recent rally, like if you go to tech, this huge rally, this sucked a lot of bulls in. I got short right here on this gap above the 200 saying, okay, that's a perfect entry for a short. But most bulls are, a lot of bulls are saying off to new highs. That's the end of that. That was a correction. Clearly they're being proven wrong. And I think it's kind of at this point, just with the close where we closed today, it's kind of it's a obvious moment where basically everyone can realize, okay, we have now broken major support. This rally is clearly a bear market rally. And the entire rally plus more is faded and we're heading lower. That's what everybody realizes at this point. So expect a big rush for the exits. Stop losses are going to get hit. You're going to have selling rush for the exits. You're going to have Johnny come lately shorts, people that didn't short at the objective area. They're all going to want to short now that the market's plunging and coming straight down. Now they want to pile on. So it's going to be this probably a pretty fast move down to that 300 area and the other target on IWM. Probably be a pretty quick, just maybe a gap right to it or a gap close and then drop, flush out move. And then we're gonna start to look for a near-term bottom down here. Okay, so I don't know if it will be the bottom, but I think it's very likely we're gonna at least get a bounce and a near-term bottom down in this area. Okay, DVN, looking at the hourly chart, how we closed, okay, this bear flag that's playing out, looks like we're about to continue it. So bear flag, there's your flagpole, here's your flag. We overshot a little bit to the upside and breaking down. We're at the bottom of the flag. Earnings are coming out. Someone notified me, and it looks like earnings are coming out on Monday. So I would say those earnings will be negative. All right. Whether they're positive, I think the market's going to trade them negative. We're going to gap down in this one, and it should sell, pretty quickly down to our target right now of, 50-50. All right. So I like that one. C&Q, this one, nothing really to look at on this one. It's just continuing the bear flag. It should break down, should continue lower. Tesla. All right. Tesla selling off below the 200-day moving average, closing, at the low for the week. Looks like it's going lower. I don't see anything really keeping this thing up, so should head lower. A little bit of support right there at about 781.39. But look, we hit that twice already. All right, hit it there, kind of undercut it, and they recovered. Hit it again, it recovered. If we get back down there, we're breaking it. I would say very likelihood we're going to break it, and boom, down we go. If we break that, we should head right down to my target at 554, 555, right in there. Okay, so that's the high. That's really my favorite target on this one is about 550 for right now. Good support there. So you should probably get a bear market rally or, at that point, maybe a big, strong 30-40% rally after we fall that much. UPS, you can see here, selling down 5%. It's just continuing the bear flag down. So I pointed this one out. I've been talking about this for weeks. We've been on this trade 100%. There's your bear flag, flagpole, continuing lower, closing down here at 179.80. Little bit of support down here. I think we're going to break right through it, to be honest, but just the bear flag tells me we're heading down to this level, 157-ish. All right, we might get a minor reaction. Maybe we hold right around 177.50 for a day or two, but I don't think we're going to get much of a bounce. All right, we're just starting to break this bear flag to the downside. We might just slice right through it. Lower on that one, UNP. Lower on this one, you can see closing below the 200-day. They tried to recover the 200-day intra-week, but the end of the week is really all that matters when you're looking at a weekly chart, and we're below the 200. Again, more lower prices, 215-ish, decent support there. So we might see a little bounce right here too. Let me mark this one out, the top. There's probably going to be something going on there. Well, that's right about 228.75. Now, I take that back because here's the thing. We already dipped down there right here on the 25th. They stepped in a little early and bought it up. So we get back down there. We should break right through that. All right. So I'm still looking at some lower targets on that one. I like it to the downside. Okay, can't stop, won't stop, GameStop. This thing should be lights out. Not yet, obviously. We don't see it in the charts yet. I expect it's lights out probably next week, or maybe the following week. It's hard to call it to the exact week, but pretty much should head lower and probably pretty impulsively. There's nothing holding this thing up except kind of mania, speculative money. There's no real strong money. There's no strong hands in this. It's just spec money. All right, it's all retail. Hedge funds aren't in this anymore, okay? And if they are, they're short. All right, you don't have hedge funds in this thing long anymore. The hedge funds that are in this are going to be short, if anything. So for the most part, you've got retail money in here, and the people that are buying this are, they probably own a lot of the other speculative stuff, and they're going to start to feel the pain in the other areas. It's going to cause them to either get margin calls where this thing gets sold out in margin calls, or they just can't take the pain across the board in the other markets. Watch Tesla. That might be a tell, because the same people that are long in Tesla have this thing. I expect the bottom just to fall out, and it probably just to drop pretty quickly down to, who knows where it's going to stop dropping, because when the selling gets going, it's going to be impulsive. I got a level here about $40. Yeah, right in here, about $40. Maybe we get a reaction there. We probably have a pretty swift move down there, I would think. Look for candles like this. See this big, huge candle? That's kind of what it's like when you got the mania, and that's how it was when it was ripping to the upside, these big, huge green candles. Look for big red candles that look like that. All right, that'll give you a clue that, the bottom's falling out of this thing. KHC, keep an eye on this one. There's a gap to fill up at 48, okay? I keep pointing that gap out. There it is, right up there. I think it's going to fill, but here's the thing. If I'm right about the market, and I think the market's going to sell down pretty impulsively, we might get a sell signal in KHC. So it would be the trickiest thing. Everybody sees that gap. It looks like it's just marching up to that gap. For it to not fill that gap would throw a lot of people off guard. And so watch the market. If you see a big gap down or this thing breaks trend, here's your trend on this is the hourly chart, but this shows on the daily too. We're marching higher. We don't have any real negative divergence or anything, so it's not giving me a clue that it's gonna break. But if you see a breakdown, some sort of a gap down, I'd probably just bail on this thing and let it go. All right, because that would be your sell signal. So watch for that. We're closed pretty much right on trendline support, so we should bounce on Monday, but just things to look for. Okay, and I took a short on this one, Alcoa AA. I pointed it out in the morning. I shorted it as it was bouncing into this trend line, this bear flag, because again, it was a pretty obvious bear flag, so you can short the top of the bear flag like that. And I added to it when it broke, but basically on the daily chart here, you've got a nice impulsive breakdown bear flag. There's your flag, and you're just starting to break. Now it just broke on, towards the end of the day, but I suspect, no guarantees, because it could gap up on Monday up around here, but I suspect that it's going to gap down on Monday and just continue that impulsive breakdown. The nature of bear flags and what makes a bear flag kind of a flag and what you expect in terms of behavior, the initial sell-off or leg down is pretty impulsive. Then you have kind of grinding consolidation higher with falling volume. That consolidation comes with falling volume. See my volume right there? Those little bars. See how it's dropping off as we're moving higher? That's and then status quo bear flag behavior. And then when you break to the downside, it's equally as impulsive as that first leg lower. So that's a very impulsive leg lower. Let's just say it was a drop from 25%. So I'm looking for a pretty impulsive drop all the way down to about 52.50. All right, 52.50-ish, right in there. The 200-day is right here, so that is one thing. Maybe it goes. I think it's at a minimum going to sell down to the 200-day, and maybe it'll be pretty impulsive, so it'll break the 200 and then bounce and recover. All right, so this would be my final target on this one. I don't see it going too much lower. But maybe it makes sense to cover a little bit at the 200, and then if you get that final drop, cover the rest. That's probably how I'd play it. Qualcomm, again, on the hourly chart, we had this downtrend line right here. I pointed out in the morning's video. We rallied yesterday right into resistance, overshot it, but pretty much closed right at resistance. Objective area to short at, and that is where I shorted it. So still short, closing down at the lows. We should head lower. You know, we should go lower, basically. I'm expecting we head down to this 123 area. I don't see any indication that that's not going to be the case here in the next week. So I don't know if we get there in a week, but, you know, should go a lot lower. And from where we're at now, that's a drop of about, 12% more downside. So I like that one. Okay, XLV, this is the healthcare sector. This is one of the areas where everyone's been hiding out in. So you're not going to get a broad market sell-off, and you're not going to get a bear market across the broad markets until you take out the safe areas. You got to take, you know, the things where everyone hides out in and tries to avoid losses. Those got to start selling down, and that's what we saw today. So here's your XLV. They popped it above the 200, made it look like it was going to recover today. Rejection right down, closing at the lows below the 200-day moving average. So this one should go lower. And this one still has, strong support. If I look at the weekly chart coming off of the 2009 lows, you can see we've got, there's your lows, and there's some support right in there. A little bit right in there, right in there. There's a tag of it. And then, so as I zoom in, let me get rid of this line right here. That would be your bull market trend line down here at 125, 124.50. Whenever we get down there, I suspect. All right, look at this. We got a horizontal support on the weekly right here at about 124.55. I suspect we gap down or sell off down to that pretty quickly next week. All right, and that will be good support. All right, doesn't mean it's going to hold, but that is where the buyers should be sitting in this thing. So if they don't buy that and you see a break of that trend line, big impulsive red candle is what we're looking for, then that's lights out for the healthcare sector, and that should be lights out for the market. You'll have tech, you'll have healthcare. Those are the two. Those together make up 40% or more of the S&P 500, and some other sectors are already weak. So at the end of the day, that should be lights out for the market. You should have kind of an official bear market, notification. All right, it won't. But the thing is that the markets will be down big already. Tech will be down by the time you're in a bear market. All right, half the losses are probably already taken on, and it's usually about that time. It's usually about time for a bear market rally. So again, that's why in my videos I've been talking about how I think we're heading into a bear market. I've been talking about it for quite a while. But I'm trying to give you guys advance warning, because you don't make money after the fact. All right, you got to be positioned ahead of it if you want to make money. All right, if you want to lose money, then you act fearful after the bear market shows up. But that's what I got on that one. And then finally, gold. You can see gold bullion sold down. Let's go to the daily here. Gold bullion kind of sold down today. They spiked it up, but it sold down into the close. I don't know. I think lower, to be honest. I really do think we're heading down to this trend line about 1840. All right. I just don't see anything that tells me that we're not going to head down there. Probably next week, maybe in the futures overnight. I don't know, but I think we're going to spike down there, and we should hold there. Okay, we should hold, but we don't have to. So let's keep an eye on that level. And again, this thing's has been in a bull market since 2018. Well, really, it's been in a bull market since 2015. We've been making higher highs and higher lows ever since 2015. So roughly 7 years. But we had a top here. We had a good long correction, and then we hit another top. I think this thing's just getting started. We haven't broke to new highs. Bull markets don't typically just run into the old highs and then stop. All right, longer term bull markets, I think we're going to break out to new all-time highs. So I'm just looking for a little more lower prices in gold, and then probably look to go long for the next long, trending leg higher in an ongoing bull market. Okay, finally, guys, Saturday live stream tomorrow at 9:15, 9:30 Pacific time, right around there. bring your trade ideas, bring your questions, and we'll go through those charts for about an hour looking at what you guys want me to look at. I will see you guys tomorrow morning. Good luck.